The banking sector in Bahrain, as I said, has uh, weathered the global financial crisis very well. The, they have not had any liquidity problems as a result of the recent crisis. They may experience higher provisioning levels, but I think coming out of the crisis, the global financial crisis, a lot of these organizations have become better capitalized, more liquid, leaner, more efficient, and therefore they're much better placed to absorb any potential fallout of the recent unrest. So I think they're in much better position today than they probably were 3 or 4 years ago to weather the effects of the recent unrest. Having said that, there may be higher provisioning levels in the next few months, but aside from that, I don't see any major impact on the banking sector, especially since the government is adopting an expansionary fiscal policy. Its 2011-2012 budget is the largest ever in the history of Bahrain. And this government spending, I think, will help spur the economy in the coming months and provide a lot of opportunities for banks to recover some of the potential spillover effects of the first few months. The effects to date have been limited. There was never a liquidity crisis in the banking sector during this period. There was no meaningful withdrawal of capital out of the country or out of the banks. If we look at the retail deposits in the banking system, I think they've dropped probably around 1 to 1.5%, which is around their normal averages. The central bank has not had to pump in any extra liquidity into the system. And therefore, I think the impact in the immediate aftermath has been limited. The first quarter results for the banks have been positive. The effects of the slowdown in the SME and retail sectors, I think, will be seen potentially in the last 2 quarters of this year. So I think it's too early to judge the effects because there will be a time lag between this period of slowdown and it trickling down to higher provisioning levels, potential higher provisioning levels at the banks, and therefore the need to take reserves, which could potentially affect profitability. But even then, given the pickup, given the government spending that is expected over the next 6 months, I expect the effects on the banking sector to be limited, and I believe the banks in Bahrain can absorb any higher provisioning levels expected as a result of the slowdown because they're very well capitalized and quite liquid. So I don't see this having any major impact in terms of a banking crisis. What we may see is a rise in provisioning levels in the second half of the year. And in terms of quantitative easing, I do not think there is a requirement for Bahrain to get into quantitative easing. I think there is a lot of liquidity that exists in the banking system today, and that liquidity needs to be deployed. The effects of quantitative easing in a situation where you already have a lot of liquidity in the system is questionable. I think what we need to focus on is having the right opportunities for banks to lend, banks regaining the confidence to reinitiate lending in the market, and at the same time a continuation of the development of secondary debt markets, repo and reverse repo markets in Bahrain. I think these are critical steps to spur the economy And I think the fact that the government is running an expansionary fiscal policy should also help in creating more jobs, more spending, and more opportunities for banks to lend and for the deployment of this liquidity.